Welcome back. It's time for Overlook Stocks here on Market on Close. Joining us now is Ben Watson. He's the Senior Manager of Trading Services for Charles Schwab. Ben, we appreciate you being with us today to flag a company that a lot of our viewers may never have heard of. You know, we're taking a look at Radware today. They hit a 3-year high. So let's talk about why.
Sure, Marley, and thanks for having me. I'll tell you, Radware, which is an Israeli-based cybersecurity company that is really in the midst of pivoting towards AI control of that cybersecurity, has been one of those really truly overlooked stocks. I mean, over the course of the last 5 years, coming off of a high that's maybe 20% above, 20 or 30% above the low that they notched back in early 24, has now started to return to profitability. In fact, they're coming off of 5 quarters successively of earnings beats and going into an earnings the end of this month, looking potentially to continue that streak. But it's a company that has a fairly strong, if you look at this 5-year chart, kind of base that they've been building over this time. As they've been doing that, what's really been driving that strength has been a return to profitability, not only in terms of cash flow, but in sales growth. Their 1-year sales growth a couple of years ago was actually lagging a little bit. Over the course of the last 3 years, that has turned positive. The other thing that's really been a driving factor here is that they have been relatively cheap in terms of return on equity based on, or relative to other companies within their sector. The one perhaps diminishing factor here that may challenge this to move higher is the fact that they are a little bit expensive on a profit basis relative to the earnings in other parts of this sector, in this software space and cybersecurity space, Marley.
And, you know, it's interesting today, they also got some coverage from Wolfe Research. They put out their own coverage on them, issued to investors a $35 price target. And they began them with an Outperform rating, you know, so they do see some potential upside, like you're indicating on the chart to us for them. You know, do you think that that ties into their history of beats on earnings and their upcoming earnings just a few weeks out?
Yeah, absolutely. And you know, they have been, to be fair, lagging behind from a price performance standpoint a lot of the other cybersecurity companies within this sector. And I think that's been kind of that maybe pivot back towards this looking for opportunities within the space. But it's kind of hard to ignore that pretty strong, repeatable, and again, I mean, obviously it's not a predictor of what's going to happen in this next earnings announcement, but the fact that they've beat by, you know, double digits in most cases on these earnings announcements for the last 5 quarters has been substantial. What has not really responded to that has been price movement until this most recent, over the course of the last month, break above this 25 resistance level, where you see a pretty good volume spike and a pretty good on that volume profile level of resistance. That's been the key. Once it's broken through there, it's moved very, very quickly through those areas up beyond this 29 resistance. You see the RSI in the lower panel there, suggesting that, boy, it has been a strong momentum drive to the upside. Now, today's candle, a little bit of a long, what we call a long-legged spinning top. It's got long legs up and down. So there was a fairly large range. This might be a short-term capitulation. Maybe we see price come back down to that 29 support before it bounces and moves higher in anticipation of this earnings announcement coming up on the 30th of January, or excuse me, 30th of July, Marley.
Well, we really appreciate the technical analysis today, Ben. Thank you for being with us this afternoon. Again, that's Ben Watson. And up next,